If you just bought a rental property, or maybe you're considering buying one, you might be asking yourself, should I put my rental property in an LLC or an S corporation? And this is a super important question because choosing the wrong entity structure for your rental business could end up costing you thousands of dollars in taxes, which is why in this video, I'm going to break down the most appropriate entity structure for your rental properties. Before we dive right into that, if you do like this video, be sure to hit that like button to help get this video into the hands of more real estate investors and help them become tax smart. Also, don't forget to hit the subscribe button and the bell icon so you don't miss out on future tax smart videos. All right, so the question is, should you put your rental property in an LLC or an S corporation? So let's get this out of the way. As a general rule, you want to avoid putting your rental properties in an S corp. While there are a few reasons for this, the primary reason is that when you remove a rental property from an S corporation, it can trigger a major taxable event. And there may become a point in time where you do need to remove the property from the S corporation before you're ready to sell it to a third party. It could be for asset protection, estate planning, or refinancing purposes that require you to restructure your portfolio. But the problem is, once you remove the property from an S corporation, it is considered a quote unquote sale, even if you're simply moving the property into another entity that you own. Imagine for a second that you bought a rental property for $500,000 and over time the property appreciates to $1.2 million. Without taking depreciation recapture into account, you're facing a $700,000 capital gain. Again, and that's even if you just move the property into another entity you own. Believe it or not, this is not an uncommon scenario. I've seen this happen to multiple clients and it can be quite painful to watch. So save yourself the trouble and avoid putting rental properties in an S corporation to begin with. Now, if you're watching this video and you already own rental properties within an S corporation, don't panic. You could still own and operate your rental property within the S corporation with little to no downside. The only downside is going to come if you do need to remove that property before you're ready to sell it to a third party. So what is the most appropriate entity structure for your rental property? Well, if you're the single owner and you're going to be the only person who owns the property, chances are a single member LLC that is disregarded for tax purposes is going to be the most appropriate entity structure. Now, if you're going to own the property with multiple people, maybe you have some partners, then typically a multi-member LLC that is taxed like a partnership is going to be the most appropriate entity structure. If you do have questions on entity structuring for your rental properties, go ahead and drop them in the comments to this video. That's all for today. If you want more tax tips that are proven to save real estate investors thousands of dollars in taxes, I encourage you to sign up for our free newsletter. You can sign up by going to www.newsletter.taxsmartinvestors.com/YouTube or by clicking the link in the description to this video. Happy investing, and I'll catch you on the next Tax Smart video.